Hello guys, good morning. This is Rev Kenin FX once again. Welcome to my YouTube channel. So this morning we'll be talking about Bollinger Bands, how to use Bollinger Bands on boom and crash. But first, if you are new to this channel, please click on the subscribe button and click subscribe to our YouTube channel and turn on the notification bell. So thank you guys. Now to move forward, like I told you, everyone must be a price action trader. So market moves based on price in forex. So everyone must be in a price action trader. As a price action trader, you must know the technical analysis of market movement, where market reacts, the demand and supply of the market, and you must know how to do some other things. And when you are in the FX market, we use indicators also, but mind you, indicators do fail. Sometimes indicators doesn't guarantee you your entry, and I know there are some traders who trade using M1 and M5. M1 market and M5, they look noisy. Look at it. M1 and M5, they look noisy. You can actually know where the market is going to. But as a trader, you must analyze your market from higher time frame. Let's say from D1 to H4 and to H1. You analyze your market from higher time frame. So that is how you become a market success. So now, as I used to tell you, every day you wake up, always try to clean your chart, make your chart neat. So now I'm going to delete every indicators you see on this chart, including the trend lines and the horizontal lines with the moving averages. So what do? I clean them up. Indicators list, I clean the Bollinger Bands. So I go to this D1 also, I clean every indicators. So I clean them. So, sorry. So now I want to tell you that you can trade without actually putting these indicators. Let's go here also. Let me clean every indicators you see here. Every indicators you see here, let me clean them. So you can actually trade using Bollinger Bands, because Bollinger Bands also serves us the purpose why we are using this. So now let's start from boom 500. As you can see, I love, after analyzing my market from the daily time frame, I love analyzing my market daily time frame. I move to H4. From H4 I move to H1 because I really love trading on H1. Before we move to Bollinger Bands, now let me tell you this. Now you can see this is the daily time frame, how I really trade my market. This is the daily time frame. Like this daily time frame, I want to spot a confluence zone. Confluence zone means where the market gain rejection several times before moving up or down. So confluence zone means the rejection area. So as you can see, this spot is a confluence zone in this market. Now why is it a confluence zone? You would see that here the market got rejected, here again, similar thing here again and here again. This is the daily candle that closed. So now what do? You move here to your H4 again. When you move to your H4, you will see that the H4 candle also closes. So there is a potential, though there is a probability that the market will have a sell probably for today. Or if the market is not going to sell, the sell will just be a retracement. This is the H1. The sell will just be a retracement before breaking this confluence zone. But note that this confluence zone is has been tested so many times, one more or twice, and there is also a probability that this market will break on the upside, because when you look at this, after drawing the trend line below, after drawing this trend line, when you look at it, we have an ascending triangle, and whenever we have an ascending triangle, there is a probability that the market will break on the upside. Now, that's not where we are going. I just want to show you that as a price action trader, you there are so many potentials for you. Now, let's go to using Bollinger Bands. Now, I'm going to add my Bollinger Bands, insert, indicators, trend, and Bollinger Bands. Let me add them. So now, what is the usefulness of this Bollinger Bands? Like, I love trading these Bollinger Bands using my H1. I love trading my Bollinger Bands using my H1. So now, what is the Bollinger Bands? Bollinger Bands is a technical indicator used to measure market volatility, and is used to identify the market overbought or the market oversold. Like, as you can see here on H1, the market is overbought before having a reversal here, and this reversal simply serves as a double bottom and the market change. So whenever the market is quiet, the bands tends to contrast. Whenever the market is quiet, the bands tends to contrast and the bands expand. Let me show you what I'm saying now. Look at this for instance. Look at this for instance. Somewhere here the market is quiet, and when I mean the market contrast means the Bollinger Bands, they are very close to each other. Note, dis Bollinger Bands, we have three lines, we have three bands. Dis is the lower Bollinger Bands, dis is the middle band, and dis is the upper band. Lower band, middle band, and the upper band. So the Bollinger Band is a chart overlay indicator, meaning it displays over price. Notice that when the price is quiet, the bands are closer. Look at here, the bands are closer, very close, very close. The bands are closer, and when the bands are closer to together, the price moves up. When the bands are quiet, the price moves up. So the upper and lower bands measures volatility in, or the degree in variation of prices over time. So now, like I told you earlier, we have the upper band, the middle band, and the lower band. So the middle line of the indicator is simply a moving average. You can call it moving average of period 20. That is it. You can call it a moving average of period 20. Now, I want to tell you how this market moves. So now, as a trader, have no fear, because if you know about price action before, and you now also know about this Bollinger Bands, I tell you, you are good to go. You are good to go. So now there is something we call the Bollinger Bounce. The Bollinger Bands. So one thing you should know about Bollinger Band is that the price tend to return to the middle. So let's say, like, if you look at there, this middle Bollinger Band, in a layman's language, this Bollinger Bands serves as either support or the resistance. This lower band serves as a support, this middle band serves as resistance, this middle band serves as support, this upper band serves as resistance, vice versa. Sometimes this what's it called, this upper band serves as resistance, this middle band serves as support. They are just vice versa. Now let me show you now. Let me show you. Look at here, the price is reaching the band. Look at here, when the price reaches this upper band, it retests, or it pull back to this middle band before breaking out. It retests before. Let me show you. As a price action trader, what we just do is we put our rectangle, and when we put our rectangle, you can see that the market was rejected here. The market rejected here, came back and pulled back here and went up again before breaking out. So that's it. As a price action trader, there is something we call, using Bollinger Bands, there is something we call Bollinger squeeze. So the Bollinger squeeze is pretty self-explanatory, because when the band squeeze together, like somewhere here now, you know the band squeeze together. So when the band squeeze together, it usually means that a breakout is getting ready to happen. So this is where I'm really going. This is the point I'm driving at. When the band squeeze together, it really means that a breakout is getting ready to happen. Look at somewhere here, when the band squeeze together, you know this boom 500 was actually buying. The band squeeze together here, but when it squeeze together, just be ready for a breakout. And when it broke out, look at how much it bought. Look at how much it bought here. So if the candle starts to break out above the top band, when the move will usually continue to go up. So guys, this is the band squeeze now. Look at it, and the candle breaks on the upper band. Look at it, price shoots up, pull. So when we get here, somewhere here again, so look at somewhere here again, the price moved, and when, if you are a price action trader, you will see this double bottom pattern. You see, double bottom is always like a letter W, and when it's always like a letter W, the price shoots up again. Now look at it here again, like I analyzed on the daily time frame. Look at it, there is also a higher high here. Look at it, where I drew my rectangle, there is always also a higher high here. As you can see, this higher high, the market reversed. And look at it here, the higher high here, this market is now serving like a double top. Let me show you that is a double top. You know, double top must be letter W. So double top must be a letter M, sorry, it must be a letter M. So if anything to go by, we are expecting the market to sell for long. So guys, just be careful. Let me quickly show you another example. Let me show you this crash 1000. Let me show you this crash 1000. As you can see, my chart is a clean chart. So what do? You add the Bollinger Bands. When you add the Bollinger Bands, look at this market. As you can see, this market already squeezed. This market already squeezed, and if you are a price action trader, you would see that this middle Bollinger Band serves as our support. When the market goes up, it rejects it. When the market goes up, it rejects it. Now look at it. Finally, the market was unable to form the lower lows and the lower highs here again. This is the lower low, this is the lower high. The market was unable to form another lower low here. What do you see? It pushed up to form the higher low, and when it formed the higher low, it's higher high, sorry, it formed the higher low here. And when did you see? The Bollinger Bands already squeezed and the market shoots up. And if you're on my Telegram channel, you will know that I took advantage of this reversal, which I've been on it for over a day, and I simply took this trade. So guys, that is just the simple secret of Bollinger Bands. Note that Bollinger Bands serves as support and resistance. Instead of drawing your normal support and resistance, Bollinger Bands serves as support and resistance. For you to know, let's go to our D1. You would see that our D1 here, this is it. Our D1 here, and when we go to our W1, this is it. When we go to our W1, you will see that this place serves as our support, because this is the lower low here. And let's go to our H1. You will see. Can you see it now? How it's stretched out. So guys, Bollinger Bands is the secret. Thank you, and subscribe to you can also opt in for mentorship. Thank you, and kindly subscribe to our YouTube channel. Thank you.